मौजू पे आते हैं, crowding out in the British Industrial Revolution. So I'm going to look at all three readings almost in the same presentation without necessarily not giving you a break. Doesn't mean I necessarily will give you a break, just that I will necessarily not give you a break. What is crowding out? To start with, just the simple stuff. The crowding out effect is an economic theory arguing that rising public sector spending drives down or even eliminates private sector spending. So that simply means that if the government starts to spend more, the private sector will be deprived of the opportunity to invest in that particular option. Let's say the government starts to build lots and lots of hospitals. If the government starts to build lots of hospitals, then that crowds out the possibility of a private investor creating a hospital or a clinic or whatever. Secondly, if the government is spending a lot, it has to finance that spending. And it can finance that spending either by raising taxes, raising more money through taxes, or it can run a debt. Debt means that it will sell government bonds, etc., etc. It will have money whereby it will finance it. Could it print the money? Yes, it could. But if it prints too much of the money, that might cause hyperinflation. That might cause a lot of inflation. So this is the preferred route, is to raise taxes and to raise the national debt. Of course, modern monetary theory disagrees with that and says that the third option is to have an expansionary monetary policy. But if you have an expansionary monetary policy and you have a commercial banking system, you're bound to run into an inflationary problem. So taxes will obviously reduce private sector income, because if people are taxed more, then they have less money to spend. Right now, as you know, the IMF has told us to raise taxes enormously in order to balance our budget. And what that is going to do, of course, is it's going to lower the rate of savings and investment. Similarly, government borrowing raises interest rates because if the government is borrowing from the state bank is giving more. In the liquidity market, it is in the credit market, it is taking more money, and because it's taking more money, that is going to create the effect of raising the interest rate. And as the interest rate goes up, it becomes more difficult for the private sector now to borrow and to invest. So for both these reasons, higher taxes as well as the interest rate going up because of higher government borrowing, there is a decreased spending and borrowing from the private sector. So private sector gets crowded out. Question?
Sir, अभी आप IMF की बात कर रहे थे, तो if IMF asks us to raise taxes, that's the point. And presumably, if you raise the interest rate, that would increase savings, and it shouldn't decrease savings.
We're talking about private savings.
Yes, private savings.
Private savings
like
may not go up.
That eventually, that you said.
No, they may not go up because I may have less money because I'm paying more money in taxes. Say meri tankhah hai a certain X amount. Now I'm paying a higher percentage tax on that X amount, so I have less money. When I have less money, I'm not going to save more. I'm going to save less.
Yeah.
Okay, got it? So, so this way, it crowds out the ability of the private sector to invest. Now, the context of this debate is very, very important. You see, in the 1980s, economics went through a major transition, a dramatic transition. From about 1945, in fact, I would go earlier. From about 1929 till about the 1980s, mainstream orthodox economics was basically dominated by John Maynard Keynes and those who followed him. His theories was incredibly influential at the time. But now, along came Milton Friedman, as I told you, and began to argue that Keynesian economics must be done away with. And it is advocating very strong regulation of the economy and the market and advocating high public spending, and all of this needs to be done away with, and the private sector needs to be encouraged. And this becomes a global revolution until it also becomes the economic orthodoxy. So in this economic orthodoxy, Milton Friedman and people like him made the argument of crowding out. It's an old argument, but it was revived again. And they began to say that all this government spending is crowding out investment, and that's slowing down the economy. The new orthodoxy now argued that the government was crowding out the opportunity to private investors and entrepreneurs. It was slowing down the competitive spirit and so on. One of my questions is, interestingly, why couldn't private entrepreneurs, to say that the crowding out effect is throwing away private capitalists, is simultaneously to, in a certain sense, say that private entrepreneurs are unable to compete with the government, which is a kind of concession, which is you're actually conceding that those government enterprises are so large, so big, and therefore efficient enough that others can't really enter. But be that as it may, history now became a new battleground for the crowding out question. Were there previous periods of history in which excessive government intervention had resulted in crowding out and slowing the economy? This became one of the concerns of economic historians. Did we do this before? If we've done it now, let's assume for a second, whether we've done it or not, could the argument be made, for instance, that we also did it in the 1920s? There was too much government intervention which caused something, the crowding out, the Great Depression or something. Did we do it in 1873 big crisis or 1893 ka crisis, etc., etc. So economic historians now began to look at the past and began to raise this question. Are there other periods in history in which crowding out of private initiative resulted in the slowing down of the economy? And here is the example that is given. British growth and industrialization, argues Williamson, was slow between 1760 and 1820. Now this may strike you, and it strikes me as a shocking sort of statement, because of course this is the period that we call the Industrial Revolution. And the Industrial Revolution, we know, is unprecedented, not in England, but in human history. In human history, no economy had grown as fast as England had grown at that particular point. At no point in time had anybody grown that fast. And yet the Industrial Revolution, by today's standards, is not that fast. It is at most 1.5% per annum growth rate. 1.5% annum growth rate is extremely low. If Pakistan had 1.5% growth, you would want to kick out the government. But yet that was called, quote unquote, a revolution. And it genuinely was, because nobody had hit 1.5% growth rate ever before in history. Shocking. But now Williamson asks, maybe that was also slow. Maybe they should have grown faster. Just because people didn't grow faster before doesn't mean they shouldn't have grown faster now. So he also notes there's a thing called trend acceleration, which is that between 1760 to 1820, growth is pretty slow. It's taking off very, very slowly. But after 1820, it begins to speed up. And as we go on and on, it begins to speed up more and more. So in fact, 1820 is a point of inflection where the speed of the acceleration of the economy undergoes a dramatic transformation. Question? Yes, GDP growth, just straightforward GDP growth. 1820 May, we finally begin to see that it actually accelerates. I didn't put the data in, but it's in the reading, you can see, and it's largely, in my opinion, quite correct, that after 1820s, it began to grow even faster. There is no evidence of improvement in the standard of living amongst the working classes until 1820, he concedes. It's only after 1820 that you begin to see the benefits of industrialization. To a very marginal and small extent, but to some extent, now begin to accrue to the working class. It's not like working class is now, doing great and, everybody's riding around in a Pajero or something. Conditions are pretty horrible in the 19th century, quite horrible. But there are small incremental marginal improvements. Industrial output grew at 1.5 or 1.6% per year up to the 1820s. Okay? Britain was considered a low saver at that time. It saved only about 9 to 10% of their income. Savings rate was not that high. Compare that now, for example, to the third world average, which is 20.1% which was almost 20%, over 20% in 1977. That's pretty high, right? Much higher than the Industrial Revolution. And Meiji Japan had 14.8% in 1910 to 1916, or late 19th century America had 28%. Soviet Union had 30%, Germany had 30%, etc., etc. So the savings rate is actually, he says, pretty low, right? You have higher savings rate today. So these are some interesting anomalies. Why? Why is this going on? Well, the answer, he says, is that Britain tried to do two things at the same time. One was it was trying to industrialize, and the second one was that it was going to war with France. France or Britain ka it kutte ka vair hai, as I like to say. Good God, look at how many times they have been to war. And then they say to us, you Indians, Pakistanis, get along. We did small wars. They were mostly border wars. A couple of thousand people got killed, I know. But look at these wars, man. Going back to the High Middle Ages, Anglo-French War of 1116, and Anglo-French War of 1123, then the Anglo-French War of 1158, and then the Anglo-French War of 1193, and then 1202, and then 1213, and then 1215, and then 1224, and then 1242, and then 1290. Forget it, I'm not going to go through it. But the summary of it is, during the 60 years following 1760, Britain was at war for 36 out of those years. Sanu bura kende ne, And often I give this data that in the 7 decades that Pakistan has been in existence, we have been under military dictatorship for 36 odd years, etc. Well, they've been at war for the same in that period.
What
So,
about the French wars?
British-French wars, Anglo-French wars.
But not necessarily along the English Channel. They would be international in that sense because of the colonies.
Oh yeah, they could be. That's true as well. Yes, but they were mostly around that area. Okay, war economy. The war mobilized a good share of the civilian labor force, suggesting that labor scarcity might have been created in the civilian economy. आपने वो पिछली डॉक्यूमेंट्री देखी थी जिसमें हाँ, all the soldiers were going to fight. They were fighting the French, and then they also started recruiting child soldiers. You remember? Yeah. Okay. The war debt grew to enormous size, suggesting that civilian capital accumulation might have been suppressed by crowding out. We'll just have an estimate of what the national debt was and how it was growing, etc. And remember, Britain is a colonial empire here, okay? And the British and French are fighting it out, etc., but it's also a colonial empire. Tax revenues, and of course, a lot of the fighting, as somebody pointed out, is going on in India, etc., through proxy forces. The French are getting behind Ranjit Singh and Tipu Sultan, and the British, blah, blah, blah. So, tax revenues surged to 1/5 of national income, implying that real private income after tax were eroded. So, taxes are 1/5 of national incomes. Big taxes, because you have to fund the war, okay? That's 25% of national income is being taxed. Meanwhile, there were also war, of course, there was blockades, there were embargoes, and in a war condition, you have diminished international trade, inflating the relative prices of agriculture and raw material importables in the home market, while lowering the price of manufactured exportables, deflected from world markets. So, international trade become ho gaya. So, we got the situation of crowding out here. Classically over there, okay, labor force is occupied in the war, number one condition. Number two, debt is enormous, so taxes are very high, all right. Number three, government, sorry, I got 2 and 3 confused, but you get the picture that number three, government is taking a lot of debt, etc. National debt is growing. And number four, international trade, there are blockages, etc. So international trade भी जो है वो पहले से कम हो रहा है, या कम से कम उतना नहीं हो रहा जितना हो सकता है. There's an opportunity cost to all of this. Now we come to the Mill-Ashton hypothesis, which is much of the revenue needed for the prosecution of war had to be obtained from loans from the national debt. The proportion was low at first, but mounted as the cost of maintaining the forces increased. Some of the money subscribed must have come out of idle balances, but a good deal of it was deflected from other channels, and in particular from investment in building and construction. The production of capital goods was relatively low in most years of war. So it had to come from somewhere, the funding for this war, the money for this war, the finances for this war. It came from taxes and it came from national debt, and that meant, of course, that people did not have enough money to build stuff, to build homes, to build things. Straightforward crowding out thesis because of war. Let's look at the size of the war debt. Net additions to the war debt were 3.6% of national income as early as 1760. I won't get into the methodology of how this was calculated. I don't think that's too important. It may be important for a British economist, but I think we're far too removed from it to get into the nitty-gritty of the calculation. Although it can be contested whether these figures are correct or incorrect. But we won't get into that. One reason it can be contested is that you need figures for inflation and you need to figure out the real, and that's very difficult to do in the period of history that we're looking at. Okay? The data is not that good in the period of history we're looking at. We're looking at the 18th century, so data is not going to be great. Okay? But anyway, net additions to the war debt were 3.6% of national income as early as the 1760s. This now rose to 6.5% by 1780s. That is, it doubled in 20 years. 20 years later, and then it reached a peak of 11.5% in 1790s. Again, the exact figures are not important, but the trend is important, that it's growing quite a bit, right? It goes all the way from 3.6% to 11.5%. It goes into double figures. That's a doubling in 40 years. Quite substantive. Yes?
So when it says 3.6% of national income,
yes.
That means it is removing 3.6% of national income.
Yes, that's what is owed to in terms of bonds, etc., securities.
Particularly high number though, 3.6.
Not compared to today, but compared to the figures back then. Yes.
The glorious revolution में क्या मसला नहीं था कि क्या कहते हैं बादशाह वगैरह लड़ाई करने लग जाते थे.
Glorious 1688.
हाँ तो मैं बात ही कर रहा हूँ कि तब
This is later.
एग्जैक्टली but मसला यही था ना कि बादशाह वॉर्स के लिए क्या कहते हैं लेते रहते थे बैंक डेट्स वगैरह. तो
Right.
पार्लियामेंट जब उनकी पावर्स बैलेंस हो गई तो पार्लियामेंट वांटेड टू कंट्रोल दीज अर्जेस राइट.
Correct.
So फिर just
But that's 1648 though,
तो फिर
not 88.
just 100 years later now they're funding the war again.
Dude, just because the capitalists are in power or have a little more power doesn't mean that they're not going to go to war. Big empires are at stake here. Okay, nobody's ever sort of learned from war that we shouldn't go to war. Every time you go to war, what you learn is that you got to be better at war. That's state history. Charles Tilley, I taught Charles Tilley last semester. Anybody remember Charles Tilley? The whole process of state formation, according to Charles Tilley, in Europe, owes itself to the continuous wars from the 100-year war, the 30-year war, the religious wars, to all of these Anglo-French wars. Europe was continuously at war with itself for hundreds of years.
Also, I think in Smith there were a lot of capitalist, because it's a large empire, colonies and all, there was a lot at stake for a lot of capitalists
Right.
as well.
Yes.
So they would go to
And East India Company, dude, we're talking about that period of history. So East India Company is in the government, etc. You think they're not going to go to war? They're like super keen on conquering as much as possible. So very pro-war. Yeah. There are very few pacifists in this period of history. Jo hai wo bechare, we don't even know who they were or whether they existed. Jay.
First, I wanted to ask that the traditional view has been that what the war economy does, if you look at the US during
Yeah.
World War II,
Yeah.
is like in the US, for example, post-depression, it was the war economy which propped up an entire
Absolutely.
State, right? And then
Absolutely.
the long run, it had private sector as well. But this argument really goes against the traditional view that the war economy builds up or stabilizes your economy for future growth.
I agree with you, and you destroyed his argument, but to play to advocate Williamson's position, the way he would come back to that is that mostly US was selling to Europe, which was getting destroyed, right? So from that point of view, US was not itself in war, it was selling stuff to people who were in war. So that's what we mean by the war economy. It only got into the war in 1944, remember, but it was selling way before that and making tons and tons of money.
But sir, then the qualifier would be that your local economy, like the ammunitions industry, armaments industry, all of those are private. As long as all of those are not state-owned, then maybe you could see private sector still growing. You're employing a lot of people, you have women coming into the workforce.
Sure.
But if that's state control, and if it was like, for example, state-controlled economy, then maybe this private investment.
Well, in a war situation, even if a armament industry is privately owned, it is completely dominated by the state in the sense that the state determines how much will be produced, what it will be sold for, etc., etc. War mein kabhi state does not allow armaments and such essential commodities, even clothes, armaments, dawai, vagara, to be freely floating. Yet capitalists make huge amounts of money because the output is so huge that even if the price is relatively controlled, and it is always controlled during war, isse महंगा नहीं बेच सकते आप. You have to sell. Every war that I have read about in the capitalist period, states have always controlled the prices of essential items, and they buy it on contract, like the Colt gun, etc. Right? That was in the Civil War, etc. State would buy that gun, but it would buy that gun at a very cheap rate. But it would buy so many guns that people would make fortunes. Same with shoes or clothes or caps or leather things or whatever they needed, canteens or whatever. So prices are totally controlled during a war because you cannot have prices go up and down. You cannot have quantities going up and down. You cannot have producers say, you know what, I want to take a break. It can't happen, right? It's requisitioned by the state. Yes.
But can't the same argument that he may be applied to Imperial Japan as well? I mean, the sheer amount of expansion they did due to their war economy and all of that,
Sure.
they were absolutely engaged in the war, not just
Sure.
selling to it.
I think these are all very good points. Again, to play devil's advocate, somebody could argue that Japan was extracting huge amounts of resources from North China, etc., which they were.
From Korea and all of that.
From
as
Korea
well,
and North China,
but
yes.
it still, even Korea developed because
And
of the
from-
war economy that Japan imposed on it.
Sure. Well, I'm not so sure about that.
It's an
No.
argument that could be.
Yeah, I don't think the Koreans would be happy with
They
that.
would not be.
I went to Korea and they would hate that argument. They would really, really not like you for saying that. Huh?
थोड़ी सी inaccurate है because क्या कहते हैं
Koreans feel very strongly that Japanese occupation was the worst thing that ever happened to them, by the way, because they feel the Japanese were extremely brutal, killed people, which they did. Chinese feel the same way. Burmese, Vietnamese, all these people across East Asia saw and considered Japan to be a very brutalizing imperial power, and Japan was at that time
It was,
very brutal
no
power.
doubt.
And I'm not so sure that the argument can be made that Japan was doing any kind of real investment in these areas, like the British laid the railways, etc. Japan was not doing that. Mainly Japan's economy at this time was relationship at this time with Korea, China, Burma, Vietnam was extractive rather than to invest there and build, etc. ठीक है?
नहीं कोरिया में तो वो कहते हैं ना कि थोड़ा थोड़ा उन्होंने मैन्युफैक्चरिंग के एरियाज लगाए थे टू लाइक क्या कहते हैं मेक स्टफ देयर एंड टेक बैक
It's only insofar as the war economy was concerned, but it was very brief and it was not extensive at all.
इकोनॉमिस्ट तो कहते हैं कि इस वजह से कोरियंस ने तरक्की की एंड आल्सो द
No,
एजुकेशन
I don't agree. I think Koreans really began to, their takeoff was post-war when the Americans decided to get in there and give them vast technologies and so on. Koreans are extremely poor people at the time of the Japanese occupation. And as far as my own experience is concerned of speaking to Korean intellectuals, South Korean intellectuals, not North Korean intellectuals, they don't ascribe any of their economic takeoff at any level to Japan whatsoever. If somebody has said that, that's their business, and that's their right as an academic. But I don't think that that's a very strong argument. At least the Koreans will not accept. They feel very strongly that, in fact, if anything, when they fell under Japanese occupation, that they suffered enormously from genocide and from extraction at a scale which, on the whole, it was like the early period of the East India Company.
सही है लेकिन enrollment rates at the time of Korean independence in school and education was 97%.
Who told you that?
ये एक economist का पूरा paper है
All right, you show it to me, I'll have a look. I don't think that could be accurate. At 45, you're saying enrollment rate was 90%?
वो कहता है कि because they had so much education, they had this
I find that extremely hard to believe. You provide me the statistics. How could it be possible in the middle of a war?
Sir, actually, I've heard
Wait. How could it be possible in the middle of a war? Chalo khair. It's a separate question. We're getting tangential to our real interest over here. So, is your question related to this? Forget Korea. We're not studying Korea. We're going to study it later in the semester. Then we'll worry about it then. Okay? So, bring your attention and focus back to this question. Okay? So, now let's look at private investment. Domestic investment in reproducible capital averaged only 11.4% of national income from 1761 to 1821. The gross private saving rate averaged 18.1%. So the key finding here is, Salman, also please pay attention, is that while saving rates is almost is over 18%, reproducible capital is only at 11.4%. Okay? Why is this the case? Actually, savings is not as low as 9-10%. In this period, certainly it goes all the way up to 18%. But then why is investment so low? It appears that Britain was not a modest saver during the first industrial revolution. After all, what makes Britain unusual is that much of the potential saving went into the financing of war. So it's not like they were not saving, but they were not able to put that into investment because it was going into the war. How much faster, now the author asks, would Britain have grown without this crowding out effect? What if all of that money that was going to fight the war was now going to build factories? Okay, we can accept this argument. It's not a unique argument to accept that instead of spending money on arms, you spend the money on building, you'll grow faster. Is that impossible to accept? No. The only point at which economic recovery occurs through the war after the Great Depression is because there's all this idle capacity without any demand for it. And the war creates the demand for that idle capacity. But here we are talking about a different phenomena altogether. We're not talking about idle capacity. We're talking about building the capacity. How do you actually grow the economy? So that's a grown economy that is contracted dramatically from the Great Depression, and now it needs a push in aggregate demand in order to grow again or in order to recover. That growth, that push is provided by the war to the American economy. Okay? Don't compare that to Japan or some other imperial power. Britain also grew enormously during the period of the Bengal colonization. It extracted huge amounts of money from Bengal. Of course, it resulted in the depletion and underdevelopment of Bengal itself. and the destruction of the Bengal itself, right? So, so that of course can be the case that you can also grow through extraction, and people do. But here's the different question. The question here is, okay, what if you were not throwing that into war against the French? And those wars, in any case, nobody really won those wars. They continued fighting and nobody decisively won those wars. What if you were putting that into something else? What would happen? Well, let's try and get the statistics there. Now, that's a very difficult calculation to make. It's a projection, it's speculative, very, very difficult to calculate what would happen if all that money had been put into private investment. He says, well, we've got the Ricardian non-equivalence theorem, which is we are too apt to think that war is burdensome only in proportion to what we are at the moment called to pay for it in taxes, without reflecting on the probable duration of such taxes. So taxes, you continue to pay for war for long after the war has finished, because the government has taken the debt is paid back through taxes, etc. Those receiving the interest on bonds, rich people, are not the taxpayers, who are in fact poor people. So people who are holding the government bonds are often rich people, because they're the only ones who can buy it. But the people paying the taxes in England at that time were all poor people, because England had a regressive tax structure just like Pakistan does even today. This is only after World War II that Europe ke andar tax structures became progressive. Before that, most tax structures across Europe were regressive. Poor people paid a higher proportion of their incomes in tax than rich people. Some people would say that's still the case today. Okay. So finally, do we go for one-on-one crowding? Every dollar or pound rather spent over here would be spent over there. How do we figure that out? Relationship, he says, yes, we'll go for that in terms of calculation. Also, the whole calculation sort of depends on this idea of full employment, because if there's unemployment, then private investment can easily take up that those unemployed people. There are spare resources sitting around. But if there's full employment, then of course that one-on-one crowding assumption is true. And he says the full employment assumption is the best description of Britain during the Industrial Revolution. So yeah, let's just go with it. Let's just go with these. Let's take these as hypotheticals. If we take them as hypotheticals and we run the number, what do we get? Between 1761 and 1820, the capital formation share would have been 4.84% higher in the absence of war, and the rate of accumulation would have been 1.7% per year higher. Interesting, I'll repeat it for you. Okay, the capital formation share would have been almost 5% higher, and the rate of accumulation would have been almost 1.75%, quarter to whatever, 1.74% higher. Assuming an output elasticity of 0.35, that's 35%, annual income would have grown by 0.6% per year faster. You compound that up, so your growth rate would have been 0.6% faster. That is, if you were growing at 1.5% in real terms, you'd now be growing at 2.1%. Okay? Now, you add that up between 1791 and 1820, the capital formation share would have been higher by 6.38% because you're accelerating. By the 1790s, you're even going faster. The rate of accumulation would have been even higher at 2.42% per year, and the rate of output growth would have been 0.8 or 0.9% per year faster. So nearly a full percent point faster. Okay, that's the calculation he's done. Moreover, if you had peacetime conditions, that meant that manufacturing would have grown at 2.3% per year faster. Agricultural output, he admits, might have fallen actually, but manufacturing would have grown. Although major wars create a scarcity of unskilled labor, peace would have raised the growth in workers' living standards by 0.84% per year, or by 65% for the 6 decades as a whole, because it was compound over time. So that's a pretty substantial increase, both in growth as well as in welfare. So basically, to sum it up, if instead of spending on fighting the French, they had spent that money and invested it, then they would have grown by a percentage point faster each year. Over 60 years, that's quite a bit. And that would have resulted also in substantial improvement in the standard of living of workers. Yes?
So how much progress do you think is made for arms when fighting during war? So how much do you maybe that also?
Good question. Let's come back to that. Let's come back to that. Yes?
तो सब बहुत हवाई बातें in the sense कि अगर थोड़ा सा भी कंट्रोल लूज हो जाए इंडिया पे तो जो रॉ मटेरियल सप्लाई आ रहा है और वो उस चैनल में अगर मसले आ गए तो फिर तो बहुत ही बड़ा लॉस हो जाएगा।
ਤੁਹਾਡਾ ਮਸਲਾ ਹੈ ਤੁਸੀਂ ਮਸਲੇ ਹੀ ਤਲਾਸ਼ ਕਰਦੇ ਹੋ ਹਰ ਵੇਲੇ ਕਦੇ ਕੋਈ ਚੰਗੀ ਗੱਲ ਮੰਨ ਵੀ ਲਿਆ ਕਰੋ ਉਹ ਕਹਿ ਰਿਹਾ ਜੰਗ ਨਾ ਕਰੋ ਅਮਨ ਕਰੋ इन्वेस्टमेंट करो बेहतर होगा, ਤੁਸੀਂ कह रहे हो नहीं जंग करनी है ਅਸੀਂ। अब देखो सारे जो है, अगर मैं यहाँ आके कह रहा होता, दूसरे आर्ग्यू कर रहा होता ना, तो सारे यहाँ पे कहते सर कैसी बातें कर रहे हैं ये, आप जंग छेड़ने की बातें। अगर मैं आगे ये कहता कि इंडिया से जंग कर लो इकोनॉमी ठीक हो जाएगी, तो आप सब ने आर्ग्यू उलट करना था, सर ये क्या बात है आप कर रहे हैं। हाउ इज आर्ग्यूइंग फ्रॉम बोथ साइड्स द पॉइंट। But let's continue, okay? That's an important point. Hold on to that thought. We'll discuss it later. Acha, so where am I? Okay. Wैसे, by the way, Ibn Khaldun once said, okay, if you want to be a good reader, you should always make yourself the enemy of all that you read. So I'm happy to see that, you know, when you read something, even if you like it, even if you're like, oh my God, this is perfect Marxist stuff, I'm Marxist, I like it. But when you read it, you have to read it critically. You have to be the enemy of what you read in order to be, that's called critical thinking. You have to be the enemy of what you read just to pick out where it could be wrong, possibly. That's the way to read, so said Ibn Khaldun. And he was a great scholar. Okay, but wait a second. None of you have raised this objection, but this is one of the main objections raised. Was there really a national financial market? Did interest rates in London truly impact industrialization in the north of England? Can we really make this calculation? Can we really say, okay, you know, what is happening in the financial market and what is happening with the Industrial Revolution are related? Well, Buchensky and Pollack look at the real interest rates and housing data in that period, and this is the other reading I gave you, and conclude that regional capital markets, in particular those of the industrializing north and London, however, was still segmented in the mid-18th century, but by the period of the Napoleonic Wars and a fortiori by the middle of the 19th century, regional capital market integration was in evidence. So, okay, 1760 not so much, but by the middle of the 19th century, 1850s, there was a capital market. But remember that the author is talking about 1760 mainly to 1820, because that's the period where Britain is mainly going to war against England, okay? So the data doesn't fully prove, for various reasons, but also for the period of history it's looking at, that there is that kind of financial market integration. I will return to this theme in the second part as well. So to conclude, most of the increase in national income per worker during the first industrial revolution was caused by productivity advanced. This is really fascinating for me. You know, when I read this, I was like, this is so interesting. And little by accumulation and capital deepening. So what's happening in the Industrial Revolution, try and understand, is that there are big jumps in the ability of people to do work much faster. In the contemporary third world, total factor productivity improvements explain only 10% of growth. Oh my God, OMG. What are some of the other things? JBH, people. It took me a while to figure that one out. JBH, people. Why is this JBH? Because actually, productivity of labor does not explain why GDP growth ho rahi hai. Productivity of labor is only 10% of why GDP growth is occurring in third world countries. That is so fascinating. Whereas here, it was the other way around almost. Whereas other nations passed through early industrialization record high contributions for conventional capital accumulation and low contributions for total factor productivity growth, Britain prior to 1820 suggests the opposite. Why? The answer seems to be very simple. The rate of accumulation was suppressed by war well below what it would have been in peacetime. So new inventions were being created, and Britain was growing because of new inventions, but there wasn't a lot of capital being invested into those new inventions, etc., because most of that was being used for war. So all the growth occurred because of new inventions, and very little of it occurred because people were investing and creating lots and lots of new plants with small growths in productivity. So if you have a 10% growth in productivity, let's say if you have a machine and it helps you grow by 10%, but you have that machine is now invested, you have investors who were able to take that machine everywhere in Pakistan, you will expect a pretty substantial growth. What is total factor productivity growth? Maybe not more than 10%, because that's the new machine you have. But overall growth is a lot bigger than that, because you've taken that machine and invested it everywhere. So here you have these phenomenal machines that are growing the economy, can grow the economy enormously, but the economy doesn't, nahi beta ro nahi, theek ho jayega. हम भी grow कर लेंगे किसी ज़माने में. Total factor productivity, labor productivity हमारी भी grow करेगी. Optimistic Ijaz Nabi was optimistic. Ijaz Nabi. He stopped crying. Oh, I spoke too soon. Anyway, okay, so you get the picture, right? So these two forces, these two forces, that is investment demand and crowding out, are likely to be far more important than thrift in accounting for the historical variety in growth. So it has less to do with savings and investment, because the savings and investment are going to the war economy, it's not really being invested, and this crowding out going on. And there is labor productivity growth, which was accounting for the Industrial Revolution, but there isn't, all that money is being used to fight wars and not really to invest. So that's the argument in a nutshell.